Hey, my name is Darius, and welcome back to Founders Unchained, the show where we sit down with startups, builders, innovators, and experts in the field who are sharing the real life experiences, what it takes to build a startup from scratch. And today I have a special guest, Remus. He's the MiCA expert, and he's the founder of Synergic.io. And it's really a pleasure to meet you, to have you on the show. And Remus, I think that your experience, your knowledge will be very beneficial to the people who will be watching this episode. As everybody knows, if you do something in crypto space, you need to be licensed. So for people who don't still get the licenses, we need to know some nuances, some important stuff before we do any business in crypto. So thank you very much one more time, Remus. It's really a pleasure to have you on the show. So for the people who don't know you, Remus, maybe you can introduce yourself really quick, tell us about your background, what you do, and most importantly, how you can help startups.
So hello, Darius, and thank you very much for the invitation. It's an honor to be here with you. It's always a pleasure to talk to you, and hopefully we will have a good discussion in this regard. Regarding your question, my background is in law. I'm actually a lawyer, a licensed lawyer. But over time, I moved closer and closer to technology, to fintech, to digital assets, and so on. Basically, starting with 2016, I moved into GDPR compliance because the new regulation came into force in 2018. I specialized in that regard. But also, starting with 2018, I moved closer to the crypto space, to the crypto world. What drew me into crypto was that founders were building globally from day one, but the legal support around them was often either too slow, too generic, or disconnected from how token projects actually work. I kept seeing the same pattern, strong teams with good products but weak legal infrastructure. They had a white paper, maybe a token model, maybe some code, but not a coherent legal position around the issuance, the AML procedures, the disclosures, or investor documentation. That gap is what pushed me deeper into crypto space, starting with, as I said, 2018. My first touch base with the crypto was because, in that period, the legal framework, the regulation in that regard was zero, basically. One of the first documents that I started issuing for different projects were the legal opinions with regards to the nature of the tokens. That being one of the documents that were requested by different exchanges for the listing procedures. In itself, a legal opinion would require a very good level of knowledge of how crypto space works, of how token works, and so on. So that was my first touch base with the crypto space, and from that point on, I've started developing more and more legal services in this regard. And here I am today. Basically, I can say that more than 90% of my legal work currently, of our legal work currently, are in the crypto space.
Cool. Thank you for sharing this. I think this is like a really hot topic, and this is how you might be busy. There are many companies in the market right now. You can meet them in conferences, you can meet in the calls. Everybody is discussing that, MiCA regulation, this is something what everybody, should follow. We need to be licensed. And of course, to get this license is not so easy as it might look at first glance, because you need to have a proper team in place. You need to prepare the documentation which is needed for the submission to the national banks. And quite a lot of things we're going to go through today, just to try explain to the audience, what it takes actually to get the license. Is it easy? How it needs to be done? What we should know. So Remus, can we just talk also really quickly about Synergic.io, what you do, what kind of services you can offer to the clients, and can you just give us a little bit more details on that?
Yeah, I built Synergic because founders don't need legal theory at the speed of traditional law firms. They need usable answers fast. And in crypto, a listing window, a fundraising round, or token launch doesn't wait for weeks for a memo. The initial idea behind Synergic was basically simple. Build a legal service that is practical, crypto native, and that has a fast turnaround. Not just advice in the abstract, but actual documents that founders can use to move forward in confidence. As I said, we're currently, to date, revamping our project, our Synergic project, and we are adding a very interesting layer. And actually, this morning, I've received some good news from our development team. what Synergic will become in the coming weeks, it will be a platform exactly for MiCA compliance. Of course, MiCA will be a first step. We intend to develop also in other jurisdictions for VARA later on and so on. And of course, we will also move in the MiFID realm and so on and so forth. And one of the most important problems, especially for startups, is how do they manage their costs with regards to MiCA. And as we all know today, and for a good reason, MiCA licensing is quite costly because obviously the procedure is of very high complexity. It takes 6 to 9 months actually to get the license. So it's quite a bit of work. But it's also costly. So one of the ideas that we had was to try to leverage the power of AI into trying to develop the foundation layer of the licensing procedure. So what we will do, actually, we will start testing this later this week, will be a form of automation for the project that will enable the creation of the whole set of basic documentation for the licensing. So basically the first step will be fully automated. The project will be able to create an account on our platform, will be able to provide certain set of documents and information, and based on that they will receive a full set of documentation for the initiation of the MiCA licensing procedure. This will mean not only fast turnaround, as I said, but it will also mean a better management of the costs. Of course, no one will ever tell you that those documents will be perfect from the very beginning. We do not pretend to provide such a service, as it's impossible, but at least they will provide around, we estimate 90-95% already correctly drafted set of documents. From that point on, the project will be able to either provide the documentation to their legal team if they have one and move forward with the licensing procedures, or they will also be able to avail our services further, and one of our lawyers from our team will be allocated to the project and continue the procedures further. This in itself will mean a much faster move, a much faster step towards licensing, and we are very happy to be able to test this, and hopefully in 2-3 weeks or 1 month tops we will be able to launch the project, and I will make sure I will let you know about that in the coming days.
Sure. So congrats first of all on this development, and I really believe that this is really needed in the market. So please let us know when it will be ready. I'm pretty sure that there are many people who would like to try it and use it. Speaking about set of documents, what you was mentioning, so do you mean full package, or it's some specific category of documentation like legal documents, or you also working with business plans and ICT and so on?
We want to provide a full package. Of course, the project will work on a case-by-case basis because there is no project that is similar to another. Each project has their own, particularities, and each project has a certain level of development. So there may be a situation in which projects may already have a business plan in place, or may already have a MiCA white paper in place. It depends on the moment a given project is, and starting from what the project already has in place, we will provide the rest of the documents. But if we talk about starting from zero, we try to provide, and this is the fundamental idea, we will try to provide everything. So it's a full-fledged set of services that will be perfected, as I said, up to a 90-95% level of completeness. And from that point on, it's a mere formality for the legal team within the projects, or for us if they want to continue with us. Moving forward, it will be a simpler formality to fill in the blanks or change whatever needs to be changed in order to submit the documentation to the regulators.
Okay, thank you. So it's amazing idea, and I really wish you good luck with that. For the people who don't know, for example, what is MiCA? So can we just simply explain to the audience what is MiCA and why it's important?
Of course, MiCA in itself is basically the first EU comprehensive crypto-specific regulatory framework. It creates, if you want, a harmonized rulebook for certain crypto assets issuers, stablecoin issuers, or crypto asset service providers, also called CASPs, across the European Union. In simpler terms, it tells founders when they need disclosure, when they need authorization, what kind of conduct standards apply, and what kinds of business can legally operate in the market. MiCA matters globally because it doesn't only affect European founders, it affects any project around the world that intends to provide any type of crypto-related services to European citizens. So there's a full set of rules implemented by MiCA, and those rules are already implemented at a national level by all the member countries, member states. As I said, it matters globally because crypto businesses are rarely local. Even if you incorporate outside of MiCA, as I said, outside of EU, as long as you target EU users, you have to be in compliance with MiCA.
So thank you for this explanation. Where are some specific MiCA categories, and you was mentioning a couple of them. You were saying that, if you are offering some kind of exchange services or you are offering custodial services where you keep the money of your clients, then you are related to MiCA. Is this MiCA applicable to all the players who actually touches to the crypto? Can you just share some insights on that?
Yes, MiCA basically regulates everything that is crypto related. So almost any type of service provider that touches even remotely crypto space, the crypto space needs to be one way or another regulated by MiCA or have to comply with certain MiCA regulations. Because as I said, some certain types of projects need authorization, others need only a simple notification. It's on everything is on a case-by-case basis. Let me explain you in simple words. We have as categories in MiCA. MiCA regulates three types of categories: the ARTs, EMTs, and the OCAs, other crypto assets. The first category is basically the asset referenced tokens, the so-called ARTs. These are tokens that aim to maintain a stable value by referencing another value or another right, or a combination of them. So an ART references a commodity, for example, or a real asset or real estate asset value. The value of the ART is always the value or part of the value of the referenced asset. Its value doesn't change by the demand and request and demand value within the markets. It's always the value of the referenced asset. A second category is the e-money tokens, EMTs. In simpler terms, we talk about here about the stablecoins. So these are tokens or coins that aim to maintain the stable value of an official currency. Many people, I have noticed in my work that many tend to confuse these two categories, an ART and an EMT. As I said, the ERT, and I want to be clear in this, references an asset, whatever type of assets, or a basket of assets for that matter, which can be real estate or any commodity, or a set of those. Whereas an EMT is an electronic money token, it's a stable coin, and references is basically pegged to the value of an official currency, be it a USD or a euro or whatever. The legal regime enforced by MiCA is much stricter in the EMT realm, and it's much more difficult to comply with, obviously. It's not the easiest. Then we have the so-called catch-all bucket, the other crypto assets. And this category includes many of the utility tokens, the governance tokens, native tokens that are not ARTs or EMTs, and assets that usually are not already regulated as financial instruments under other traditional EU financial laws. This bucket, this category is usually lighter. They are still regulated, but it's easier for issuers to comply with MiCA in this regard. There are those obligations with regards to disclosures, having a MiCA compliant white paper, marketing conduct rules, and so on and so forth. So these are the main three categories of assets regulated by MiCA.
Okay. And Remus, can you just explain the difference between, for example, security token? Some time ago, many people were speaking about the security tokens. I'm not sure if people understand what is the difference between ART and security token, because by the nature, I think we do very similar thing. In both ways, we could be understood as, let's say, shares in that, let's say, tokenized object, which is split in multiple tokens, and this token is representing some specific value of that asset. So to me, it's also not clear, what is the security token and what is ERT and what is the difference?
Yeah, usually starting with the US a few years ago, there were basically two big categories before we go into MiCA. There are security tokens and utility tokens. In very simple terms, a security token is a token that is pegged to the value of the company, of the issuing company. So, for example, if a token represents a share of profit within the company, much like shares within the company, if the token holder gets the same privilege and benefits and rights as a shareholder, then that token is most certainly a security. So basically, you are the shareholder and the issuer of the token, but once I buy that token, I have basically the same rights as yourself. This means that the token is a security. It enters into the realm of profit sharing and so on and so forth. On the other hand, a utility asset is a utility that basically lives by itself. So once the token issuer issues that asset and that asset goes into the market, that asset gets to have a life of its own, and it's completely separated of the life of the issuer. To give you an example, if tomorrow the issuer will go bankrupt, the token will continue to live respectively. And one more detail that is very important is the fact that the value of the token is not pegged to the value of the issuer. If you peg the value of the token to the value of the company that issued the token, then the token automatically becomes a security. Whereas if the value of the token is completely separated and has a life of its own, which is regulated by, as I said, demand and offer, then that asset is a utility. This is the way the US markets regulated the nature of the tokens, US and Canada, and that also applied in a very big way in Europe before MiCA came into force. Once MiCA came into force, the European regulator decided to divide the assets into these three categories that I have explained earlier. And of course, some of them, for example, the ARTs can become securities, but it's not compulsory. It depends on the way ARTs are developed. The mechanism behind the ART is developed. So there are quite a few conditions to comply with in order to determine whether the ART is a security or not.
Thank you very much for this in-depth explanation. It's much clearer right now, what are the categories and what is the difference between those tokens, and I really appreciate that. So Remus, speaking about the MiCA, what is already in force, what's coming, and what is still unclear? Can you just elaborate on this?
Well, in short, everything is enforced. What we can eventually discuss would be the jurisdictions that are still in the grandfathering period, which will end anyway by the 1st of July of 2026. To my knowledge, there are about 15 jurisdictions still offering the grandfathering period of 18 months. All the others have ended the grandfathering period by the 1st of January. Grandfathering meaning the period in which crypto projects are allowed to move to the new type of license, because there was some jurisdictions had some old types of licensing which are no more enforceable when MiCA came into force. So they would have to move to the new types of licensing, which implies, of course, a certain set of procedures. So that being said, 2026 is not a future issue, if you want. It's a more operational issue. What remains less settled is not the existing of MiCA, because it's already in force, in full force, but how supervisors apply it in practice, where they can draw the line on DeFi, how they interpret the NFT structures, how strict they are on making marketing into the EU from offshore, and so on and so forth. So, of course, it's a new law. MiCA is a new regulation. Nothing is perfect from the very beginning. Nothing is fully regulated from the very beginning. Of course, there are different situations that may come up in the future and that need clarification from the regulators. This is already happening. All in all, everything is in full force to date.
Okay. To me, knowing that there are some specific jurisdictions which are still have this extension of a period, it looks like that, regulators ask VSPs companies or crypto companies, and we ask, are you ready to be licensed? But from another hand, what I can see that we may raise the same question to regulators also for the European jurisdictions. Are they ready to involve, crypto companies into this market? This extension means that we're not prepared yet also to take in all the, companies who wants to do and operate business in those jurisdictions. So it looks like that both companies and regulators also needs to work on it. Yeah, so thanks for sharing. And Remus, maybe you can highlight a couple of jurisdictions, what you know, which still have this extended period.
Of course, the extended period, I have a list here. We talk about Bulgaria, Czech Republic, Denmark, Estonia, Greece, Croatia, Italy, Cyprus, Romania, Belgium, Luxembourg. So there are quite a few, but unfortunately, the period will end by 1st of July.
Okay. So after 1st of July, all the companies who wants to do anything related to crypto as a business or services, we're supposed to have license immediately from 1st of July, basically, whereas no chance for you to do any unregulated and unlicensed business, right?
And indeed, you are very right in what you said before. It's not only a matter of projects looking into getting regulated, but there's also, as we said, it's a new law. It's also a problem of how the regulators interpret this new law, because as we all know, crypto is still a new concept. And for the regulators to get acquainted to this new concept, which was outside the law, so to speak, not illegal, but unregulated, the regulations, once it came into force, the regulators also had to adapt, had to learn. And there's also, I think, quite a bit of lack of knowledge in the regulator area. So this one may be one of the reasons that licensing currently takes so long. We do our part, as I said, with Synergic. We're trying to enhance the timing to do our side of the obligations as fast as possible for our clients. But we also have to, and there's still a matter of communication, of back and forth with the regulators, where some of their requests or requirements are sometimes strange. But this is, how every start is. Hopefully in time those periods, the licensing period will shorten, and we will be faster, and it will be much clearer also for regulators, not only for us. It will be much clearer how to provide the license and what to request from different projects.
Okay. And Remus, just coming back to the solution, what you are preparing right now and going to launch, is that solution prepares the documentation, but also can make an audit, let's say?
Yes, we are looking into the possibility of auditing, yeah. Not smart contract auditing. We do not go into smart contract. This is a pure technical element. We are looking into providing the legal side of the work. Of course, smart contract audits are always requested, and that is something outside of our scope. But we are looking into auditing, of course, also. We are still in development, and we are still coming up with new ideas. We just accomplished a very big step, which is we have a form of an MVP stage with the platform. We will begin testing in the coming days, and of course debugging and so on and so forth. But also we are discussing the possibility of auditing and how it can be done. Of course, there's quite a few heads involved in this project. So yeah, we continue to develop the ideas.
Remus, can we also touch, the documentation part? So what is the stack of documentation needed to be able to submit the documentation to central bank of, that specific jurisdiction?
Well, first of all, depending on the nature of the project, and I speak from experience, the submission of the documentation does not always regard the national bank. Usually, the EMT issuers are more connected to the banking system because they issue an electronic money token, which, if they connect it to fiat on-ramp, off-ramp, they have to have a licensing and an approval from the national banks of the jurisdictions. But there's also another regulator for the OCAs, for example, are the financial supervisors from any given jurisdiction, not necessarily the banks. The question is fairly complex because a utility token issuer, for example, needs to comply with the minimum set of obligations, amongst which the MiCA compliant white paper and the submission, the notification of certain rules and the compliance with certain rules. Whereas ART or an EMT token issuer needs to comply with quite higher set of obligations. Also regarding guarantees, it's a very complex set of elements. I will tell you from our experience, for an ART token issuer, we have had to submit to the regulator almost 150 separate documents. So it's quite a bit. Going into detail in this regard is, I think, outside the scope of our discussion because it's a very high complexity element to discuss in just a few words.
Okay, if we could just take a couple of groups of documentation. So as I understand, there is a package related to business. So you need to have business plan, for example, you need to have financial forecasts. Another group is related to ICT, cybersecurity things, and another, which is also a very, very huge part, is like compliance. Is that correct?
Exactly correct. Yes, this is true.
Okay. Remus, you've probably seen a lot of white papers. A couple of years ago, let's say people who were issuing the tokens, utility tokens, we actually had very unique white papers, and the structure of white papers might be different kind of quality, and that was okay. And it purely was like down to imagination of the founders, how to write it, right? There is no specific structure, there is no specific rules. But as far as I know, when the MiCA came to place, those people who wants to write white papers and publish it somewhere, we need to follow also some specific rules. So can you just also elaborate on this?
Yeah, so I think one of the biggest mistakes that the founders still treat the white paper as a marketing deck. Well, under MiCA, the white paper became a legal disclosure document. For most crypto assets in the OCA bucket, so to speak, the white paper needs to explain the project, the issuer or offerer, the token features, the rights and obligations attached to it, how the offer admission works, the technology at a meaningful level, and the risks. It also has to be consistent with the marketing communications. What founders get wrong is usually one of four things. First, they are vague about who the issuer actually is. Secondly, they describe the utility in a promotional manner without clearly explaining how the token functions in legal and operational terms. Third, they understate the risks or bury them under generic boilerplate. And finally, fourth, their website, the socials, and the pitch deck say things that don't even match the white paper. MiCA came into force and provided a certain structure, compulsory structure, to the way the white paper needs to be drafted. It is very clear. It has everything that is implied in let's call it the template provided by the regulator, needs to be filled in correctly and completely. So this type of white paper MiCA obligates the token issuers to provide ensures full transparency, full technological divulgence of the token mechanism and so on, and basically provides the whole set of information regarding the issuer, from the identity to technology and to legal compliance. As far as I'm concerned, I consider this MiCA compulsory type of white paper a big step forward because it clarifies exactly what that white paper needs to contain. Because as you said, a few years ago, white papers were Wild West, from 2 pages for certain projects, meme projects, to 45, 60 pages to obviously more professional projects. but not even those projects were fully compliant with the full set of information that the regulators need the issuers to divulge. The fact that MiCA came with this complex structure of a white paper and that obligates that structure is compulsory for every project involved in MiCA licensing is a big and good step, a positive step forward in my view.
Yeah, I agree. And believe me or not, but I see in many white papers where you couldn't actually see any reference to the people who are actually building the project. So you may even see some people who shows just only NFT pictures in the team, some random names. It's not real names. And we actually published this white paper and we raised millions of dollars, let's say, per project. But people even didn't know, who is the owner, who is the founder of this project. So I think with MiCA, that will be changed. Security and insurance of the users and investors. Because, this way with MiCA regulation, all the people who will be involved in that market, we will be secured by this regulation. So everybody knows the rules and everybody knows what consequences we may have if we're going to do something not according to MiCA regulation.
Yeah, indeed. This, unfortunately, this still happens in Asia at least. GCC area is relatively regulated because as we scan around the world, I can tell you that, and you also know, Dubai has already a legal framework in place. Also, Abu Dhabi has a legal framework in place, and also Oman. I've seen lately that they have a legal framework in place with regards to crypto assets. So the GCC area has become a more stable region for development of crypto projects. But Asia, as far as I'm concerned, with small exceptions like Singapore and Hong Kong, Asia is still, so to speak, a wild west of incredibly poor white papers.
Yeah, but I think sooner or later it will be changed also because we will see this good practice. So speaking about the Middle East, as you said, there is some set of rules and regulation in place. I think by the nature we are very similar to MiCA, right? They all set specific rules in place which are very similar to each other. It's all about the customer and investor safety.
To a certain extent, yes. Of course, there are small differences, but to a certain extent, you are right. In the GCC area, what is very good is that they concentrate very much on the KYC procedures with regards and the KYB procedures, to be more precise. So they ensure full transparency on the developer or the issuer of the token or the project, because this is the first step into having a serious relationship with as an investor, for example, with the project. The full transparency on who the people behind the project are and what the project actually wants to do, and full transparency on technology also, which GCC area mostly ensures. They're not so strict with regards to the white paper, but this doesn't mean that transparency is not requested through other means. They did not create a compulsory template of a white paper, but along the way, when you want to initiate a procedure with VARA to obtain a license in Dubai, for example, they will ensure full transparency and full disclosure of all the necessary details so that the project proves that it's serious and it's factual.
Okay, many people say that smart contracts, let's say, we can secure you as a user or let's say investor because smart contracts, we have already applied rules in that contract and all the transactions might be done even automatically. Why the solution is not actually protecting the investor still?
Well, the answer is very simple, because code is not the whole legal relationship. A smart contract is code, basically. A smart contract can automate, transfer, vesting, staking logic, or redemption mechanics, but it does not answer questions like what is the governing law, what is the dispute venue, the misrepresentation, what are the consumer claims, sanctions for breaches, what is the tax treatment, what is the data protection, or who is responsible for when something goes wrong. So even though the smart contracts I consider to be one of the smartest things in the world, because it automates a certain relationship between the investor and for example, or the investor or the holder and the project, it automates a certain set of procedures, but it does not ensure the legal protection for neither the project nor the investor or the user for that matter. So simply having a smart contract is by no stretch of imagination enough, neither for the token issuer nor for the potential investor or the user. And I would advise any investor to be very careful on ensuring that there are legal frameworks instituted by the project besides the smart contract, which is, it sounds, it has the term contract in it, but it's a fully technical mechanism. It's not a contract in itself. It just ensures without human intervention, without further human intervention, that certain rules are followed. But those rules need to be legal. That means that crypto projects are not purely on-chain in a legal sense. There's a website, there's a team, there's treasury, marketing strategy, governance, communications, and very often there are some off-chain discretions somewhere. So courts and regulators will look at the entire arrangement, not only at the smart contracts.
Okay, thank you. Thank you. And by the way, I really want to share this. I know that, as it was mentioning, smart contract is like code. So basically, that means that somebody who is making the smart contract, we can make mistake, and based on those mistakes, all the following transactions may fail, and people can be in trouble. So I just really want to share that all the smart contracts which are being right now in the market, we need to be audited prior launching them into the market.
This is exactly the role of the smart contract audit companies, and there are quite a few.
Yeah. So if somebody will offer you to do some kind of investments or acquire some tokens in the market, please do your research. If that project actually had this proper auditor in place who actually audited the smart contracts, which makes sure that, actually the smart contract can work as a clock. A lot of projects underestimating, the terms and conditions, risk disclosures, token sale agreements and soft agreements. Can you just also tell why it's important, where the people should be focused?
This is a very good question, and it also connects with the previous question that you asked. I totally agree with you. Projects tend to underestimate the legal value and the legal protection that terms and conditions and other documents related to it provide. Well, terms and conditions define the legal parameter in the service. They tell users who they are dealing with, what is being offered, what is prohibited, what liabilities are limited, and where disputes go. Without that, you are often relying on assumptions, and that may not necessarily survive a dispute. Why some projects tend to underestimate the legal value of the terms and conditions is because they think that the terms and conditions regard, IP protection for the website, general use of the website when a visitor enters their website or platform, what their rights and obligations are. It's not only that. Of course, in my work, I have advised my clients, that they should have different types of terms and conditions depending on where the user is. For example, the general terms and conditions, they generally apply to any sort of website. And that is a pretty basic concept. And this is where the misconception is. This does not mean that the general terms and conditions regulate the interaction between the user and the actual platform of the project. And that would imply an entirely different and much higher complexity legal document. This is why in our work we have terms and conditions, and we provide to our clients terms and conditions for the website, which is fairly simple, as I said, but also terms and conditions for the platform, which regulates everything related to the relationship between the user and the platform in itself. There are also risk disclosures, which are, in our view, equally important because they help show that users and investors, in equal sense, were informed about all the risks that a project may provide, such as volatility, technical failure, smart contract risks, because we spoke about smart contracts before. If they are not audited, then there may be some real risks with regards to smart contracts. Regulatory change, because we are still in an ever-changing regulatory world. Liquidity risks, and many other details are regulated and comprised in these risk disclosure statements that have to be present in any project platform. The token sale agreements, on the other hand, they govern the actual sale mechanics. Who can buy the tokens? Transfer restrictions, lockups, staking, not only staking, but vesting periods and so on, eligibility, representations, termination rights. A soft, I don't know to what extent a soft is well known to the public. The soft means a simple agreement for future tokens. Potential investors can invest in projects that have not yet issued such tokens, and they will receive the tokens at a later date through the well-known smart contract mechanism that we spoke before. A soft is very useful in some private fundraising contexts because it separates the early stage fundraising from later token delivery. But they are also not a magic wand. A badly structured soft can still create securities, can create unexpected tax obligations or offering issues depending on that fact. So the role of those documents, and we have only touched very few of the documents that a project may need along the way, but these documents are fundamental for the legal protection that the projects themselves need to have in place, not only the potential investors or the users.
Thanks. I really loved how you explained this in a very short period of time, and I think it's going to be very useful for the people who will be watching this, actually. Remus, can you just explain how legal documentation can actually help attract the investors and build the trust?
Well, this is another very good question. In my view, legal documentation is extremely important when looking into investing into a project. I must admit that this is not always the case. Unfortunately, there's still education to be done in this regard for potential investors. Most of small investors are looking for rapid profits, and that they tend to neglect, on subjective reasons, they tend to neglect the real value of a legal documentation in place. A true investor, a professional investor, regards the legal documentation as one of the baselines and the base conditions for moving forward with the due diligence. Good legal documentation reduces uncertainty, and sophisticated investors price uncertainty very aggressively. If the legal documentation is not correctly or fully done, fully presented, they will walk away. On the other hand, if a founder can show a clean token classification analysis, coherent issuance documents, proper risk disclosures, investor paperwork, and a thought-out compliance posture, that would signal governance quality, and this will inherently shorten the due diligence that an investor would have to do. Investors, exchanges, payment providers, and even strategic partners all ask for different versions of the same questions. What is the token? Who issued it? What are the rights attached to it? What restrictions exist? And what is the regulatory view? A project that has those answers documented look more investable than any other project that speaks out of their brain. Yeah, legal docs are not just defensive, they're actually part of the trust layer. And this is one of the biggest misconceptions that project developers have. They do not see the legal documentation as part of a trust layer. They see it as a formality that has to be done eventually. And it's a big mistake.
Yeah, and I agree with you. I see this a lot when we have very nice pitch decks to show. But at the end of the day, if investors will raise questions about the documentation, which relates to them, all the legal documents, normally the quality of them is not really good. So I really also would like to add this comment that, it's important to make sure that you have those documents in place, and we need to be qualitative documents. And this is how we can actually build more trust, as you said, with investor. Can you, Remus, share the real examples? What happens if the founders, let's say, skip the legal layer?
The market version is usually not dramatic at first. It may look like delays, for example. An exchange asks for a legal memo and the team doesn't have one. A bank asks for a contracting entity and their answer is messy. Investor asks for how the token is characterized and the response changing depending on who in the team is speaking. Initially, those elements may be overlooked because, at first there's always the discovery mode, so to speak. At first, you ask the base questions. As an investor, you try to understand more or less about the project. If an investor really becomes interested in a certain project, then so-called due diligence will come into place and they will ask more on-point question. And then the real damage appears. Listing timelines may slip. If you don't have the legal documents to show to the investors, the funds may be held back or may be lost completely, because I've seen quite a few times in which potential investors withdrew from communication with the project for the simple fact that their documentation is not fully in place. And you can, delay them for 2-3 days, which is usually too short to have everything in place. So investors withdraw from that quite fast, because I have said before, a tight-rated investor knows what questions to ask and knows what to request from the startup project. And if the documentation is not provided within due time, they will move forward and forget about that project. The hardest cases are when, for example, founders discover too late that their public messaging created a legal risk, and they could have avoided this by better drafting the documents from day one. It's unfortunate that everybody is concentrated more on the technical development, and they tend to put the legal framework, the legal protection, the legal documentation on a secondary priority base. And that creates a lot of friction. If they start to interact too early with potential investors, that will create friction, and that most certainly generates some losses, in the sense that potential investors will walk away.
I remember once somebody was just telling me that we got nice pitch deck, we represented the deal. So pitch deck is basically needed for selling the project to the investors, but after all, you need to provide them, as you said, legal documentation. So the legal documentation is basically documents which needed to secure the deal. So all those documents are important, and unfortunately, there are a bunch of startups who don't understand this. We work heavily on the pitch deck to make it nice, but at the end of the day, as you say, we may delay until the point when investor might even, just reject the deal for the reason that we are building the documentation for 2 weeks or 1 month. So nobody's going to wait in this dynamic market.
Exactly.
Actually, the timing is really critical. So founders, we need to be prepared for this. If somebody will ask you tomorrow to deliver all the documentation, legal documentation to the investor, we need to be capable to do it in a day, not in 2 days and 3 days.
And I've seen also myself quite a few situations in which potential investments were lost because the legal documentation was not ready. At the end of the day, it's a very simple procedure. Just have somebody draft the legal framework, the legal documentation, and have it ready for whenever the case is, because tight-rated investors will most certainly look at legal documents among the first elements. I consider the pitch deck as the discovery step for any project. Once the pitch deck does the magic, so to speak, and gets the interest from potential investor, then the second step should be the actual technical presentation and the legal protection, the legal framework. If the investor wants to invest tomorrow, the project has to have already drafted token sale agreements or softs or whatever is needed, non-disclosure agreements, a whole series of documents that it happens very often that they do not have, and the investor walks away.
Speaking about the MiCA and specific requirements, how do you think is NFT projects also they in scope?
The actual answer is sometimes yes, sometimes no. MiCA generally carves out the crypto assets that are unique and not fungible with other crypto assets. So basically, they will categorize into the OCA group. Regulators are meant to look at substance, not labels. So calling something an NFT does not automatically take it outside the regulation of MiCA. I think in the real world, I'm not sure, this is my estimation, my personal estimation, NFTs will move from simple, irrelevant artwork into a more pragmatical realm, such as subscriptions for different services or different rights. The NFT holder will benefit of different types of rights from different projects that will be connected one way or another to the real world. So basically, they will be more efficient in the RWA world, in the real world assets. I see a kind of a stall in the NFT world today. I think there may be a movement towards this type of service in the future. They will mean something. They will relate to something, be it a service, be it a right, be it a fractionalized portion of a right, and so on. So it's very interesting to see how they will develop. But today, even where MiCA does not apply, NFT projects still face, anyway, they still face the consumer protection laws, the IP, the advertising obligation, the AML KYC sanctions, tax-related obligations, and general law, contract law issues. So, in a small sentence, out of MiCA does not mean out of law. So this is why I said when I started the answer, sometimes yes, sometimes no.
Okay. Speaking about DeFi, do you think that DeFi actually, is in the gray area? Because everybody is speaking about the centralized CeFi and so on, but nobody speaks a lot about DeFi, but it still exists. You may find really many DEXs, online, and those DEXs were not regulated. And at least I really would like to understand, what MiCA thinks about the DeFi protocols, DEXs, and what is the plan for them to finally also somehow regulate them?
Yeah, this is a very interesting question. The gray zone, if we can talk about the gray zone is really about control. The law is more comfortable saying that a fully decentralized service with no intermediary is outside the scope than it is explaining what fully decentralized means in the real world. If there is a front-end operator, foundation collecting fees, a multi-sig wallet that can upgrade contracts, a multi-sig contract that code that can upgrade contracts, a small governance group controlling emissions of treasury, or a team that is actively running the protocol as a business, regulators actually have multiple hooks to argue that there is an identifiable operator or a service provider. I think in 2026, the DeFi question is not, is there a smart contract? It is who actually controls, who profits, who markets it, and who can change it. That is actually where the legal risks live with regards to any DeFi project. I think it's still a gray area. I see it as a disadvantage that it's not regulated clearly, because sometimes regulators tend to interpret the lack of regulation to their advantage or to the disadvantage of the project. And they may sanction certain DeFi projects without an actual legal basis, just by simply interpreting other pieces of law or by creating their own rules, which is, unfortunately, it's very dangerous. I don't have examples in this regard, fortunately, but this does not mean that it may not happen. I think the DeFi world will clarify one way or another sooner or later. There's also an argument for the fact that, hiding behind this DeFi may create uncertainty, may create risks, high risks for users. So it will be very interesting to see how the regulators will approach this subject that today is still in the gray area. do not know how it will develop, unfortunately, but I'm very closely watching the development in this regard.
Yeah, in my opinion, where is the problem with DEXs? The problem is that we actually established somewhere, or we belong to the companies which are offshore. The founders were somewhere offshore, and those jurisdictions, unfortunately, were not coming under MiCA regulation or under other very well developed, let's say, regulation, because they are most likely in offshore jurisdictions. So this is a thing where it gets complicated. And I just actually checked the DEX screener one day, and I was trying to understand how many tokens are in the DEXs currently. So it's amazing the amount of tokens issued here, the volume of trading. It's amazing also. It's like huge numbers over there, and people are actually trading a lot. Nobody's secure just because something may happen with the token one day, and nobody can go to the court and chase for the founder and who issued this token, because we have no idea who is the issuer of the token.
Exactly, and I've seen a few projects that have developed different entities in different jurisdictions, all handling the same DeFi project. There will be, the issuer, the token issuer, but then there will be a foundation in another jurisdiction that will be the manager of the DeFi project. So not the issuer, there will be a foundation, not a company that will handle the management, the activity of the DeFi project. There will be another entity in another jurisdiction that will handle the marketing. And there will be a sort of a more or less coherent governance procedure instituted. Governance is another sensitive subject, because governance, even though it's smart contracted, it can be manipulated if it's not correctly and well intentionally drafted. So it's still a subject to debate. I would say that not in regards to the users. So I think the real problem is not the KYC of the users today, but the KYC of the actual founders and managers of the DeFi project.
Okay. And Remus, I also wanted to ask you how MiCA acts, how MiCA can be applied for the founders who actually do cross-boarding project, meaning that if we running the operations in Europe and we still want to deal with US market, for example, and regulations are different comparing with Europe and US. So how the cross-boarding projects or founders of those projects can actually make sure that we are compliant in both jurisdictions?
The answer is very simple. One of the obligations, at least in MiCA, one of the obligations that any project has is to have at least a subsidiary. So if a project is located, if an issuer, a token issuer, or any project service provider, crypto asset service provider is located with their headquarters outside of EU, they are obligated legally to have at least one branch within the EU. That branch will fulfill the MiCA licensing procedures and comply with all the legal obligations that MiCA institutes. On the other hand, if they want to be present in the US markets, they will have to have another entity, another branch. If they're not located in the US, based in the US, they will have to have another branch and comply with the local regulations that currently exist over there, or in any other jurisdiction for that matter. So passporting is not a viable option, at least for a vast majority of jurisdictions. There are some jurisdictions that lack of regulation you can apply some sort of a passporting procedure as long as you do not market directly to such jurisdictions. Again, this is a very high complexity subject. The simple answer is this: when you go to a jurisdiction, you need to apply and to obtain a certain license that is applicable in the said jurisdiction.
And Remus, you actually touched a really interesting and important topic, EA passporting. So I'm not sure if people who will be watching this know, but by getting a CASP license, you actually can submit application for the EA passporting, which will allow you to do operations in all the Europe. And I think this is like beneficial point to know, because this unlocks you capabilities to work, in all the Europe.
Yes, by simply notifying the targeted jurisdictions. Yeah. Yes.
Yeah,
And
yeah.
this is a very good provision that MiCA provides to crypto projects.
Yeah, it's very similar to EMIs, e-money institutions. We used to go throughout the same procedures. I mean, it's also similar comparing with regulation requirements. Companies who wanted to do business in Europe, we needed to go throughout EA passporting. So with MiCA, the same. Okay, Remus, so one thing in your view, every founder is supposed to do before launching a new token?
Well, one thing that any project will have to do among the first will be to write the token classification or obtain a legal opinion for that matter, and the go-to-market memo before any marketing campaign starts. So these are the bare minimum elements that any project should have in the very first days of existence. Those documents should answer in writing what is the token, who is issuing it, what rights attached to it, what jurisdictions are targeted, obviously, what services are being provided around it, what regulatory assumptions the project is relying on. Most expensive legal problems come from founders deciding those questions are after the tokenomics, and public messaging is already out. And this is unfortunately a reverse application of the actual steps that should be taken by any project.
Okay, cool. In your view, what is the biggest MiCA myth, what you have been hearing a lot nowadays?
One of the biggest myths is that once you have a white paper, you are MiCA compliant.
Okay. Okay, okay.
So yeah, unfortunately, quite a lot of projects, probably developers, young developers, or young people getting involved into the business, assume or presume that having a white paper should suffice with everything, should do. And if we go back to 2018, it could do. It could do. But this being 2026, having the white paper is by no stretch of imagination anywhere near any form of compliance with MiCA.
Yeah, so with MiCA, we're going to completely new level,
Yeah,
with
the white paper is just a piece of the puzzle if you want.
yeah, yeah,
The,
yeah.
the white paper does not replace, for example, the AML
Yep.
obligations. It does not replace the sanctions. It does not replace the consumer law. It does not replace the privacy. There's another misconception that I've seen with many projects. They all state they do not need the privacy policy document because they do not collect user data. Well, it's one of the biggest mistakes that they do. The actual privacy policy is compulsory and they actually do collect private data, even though they tend to ignore it or they do not actually know the GDPR laws at least. MiCA is a framework, it's not a magic shield.
Yeah. Okay. And by the way, I wanted to ask you, maybe this is a random question, but I think it's important to mention. So recently, people hear about the travel rule. Can we just touch this? People are speaking about travel rule, and this is something which is really new thing introduced after MiCA came to place. So people, I think, should understand also what is the travel rule, what does it mean, what is the reason why this concept actually was implemented into the processes.
I do have a personal opinion on the travel rule. I do not actually see the real purpose behind it. The travel rule basically implies a new set of obligations on crypto asset service providers to obtain from the users. The purpose behind it would be to ensure that the users do not have external means of withdrawing funds or getting money without a controlled mechanism, without a controlled source. So the travel rule means that when you move funds from one wallet to another, from one service provider to another service provider, or from a wallet to a wallet or whatever, you are obligated as a user to provide details with regards to the transaction. Where it comes from, whose funds are they, if they're your own or if they come from another entity or another person, and all the details around it. So it's a new obligation. I've seen it implemented in the crypto projects, in the crypto asset service providers that I personally am using. It's just another layer of details that need to be provided by the users to the authorities through the CASPs.
And right now, with the MiCA regulation and all the parts around, it became like centralized solutions. So authorities, we will be able to check every single transaction. We will see all the beneficiaries, who is sending, who is receiving the money. And I think it actually breaks the initial philosophy of blockchain, which was designed from the beginning.
There should be and this is also my personal opinion, there should be a certain level of privacy. There's a very fine line between how the authorities identify illegal transactions from the legal transactions. But it sometimes feels like the honest users, the legal transactions are sanctioned for the sake of scrutinizing illegal sanctions. And there are also quite a few questions raised around the world with regards to what is the true intention behind it. Is there anything more than simply just scrutinizing for illegal transactions? Isn't it a little bit more than that? Isn't it a little bit more of a control tool that is applied to people around the world? And it's, as I said, it's a very fine line. I've not hidden from you the fact that I'm not a fan of the travel rule, because the way it is structured today, it may infringe on certain privacy rights that we should remain with. It's not my business to help the authority scrutinize the illegal transactions. It doesn't have to happen by damaging or by limiting my rights. It's their problem. It's their problem how they should find other ways into identifying whatever is illegal in this world without affecting my rights. It's a very fine line, and as I said, and I repeat, unfortunately, I'm not a fan.
Remus, thank you very much for being with us. I really appreciate your valuable time spent with me today. I think this topic, what we've been discussing today, it will be so important for the community, especially for those who wants to build some business related to crypto. And I think this episode will be really as a guideline. So thank you, Remus, one more time for the time. I really appreciate that.
Thank you very much, Darius, and it was a pleasure to talk to you. I also think it's our discussion. It has been very useful, and I really hope it will help to a certain extent the projects, the people that are watching your podcast, because it's very important also for us as lawyers to communicate and to make people understand the true value of the legal protection, and to try to destroy to the level possible the misconception that legal work is merely a formality and it's nothing more than we have to do that and let's move on. So I thank you very much for inviting me again. It's a pleasure, and I'm looking forward to our next discussions. If you will think they're useful, I will always be available to you.
Sure. MiCA, it's like hot topic right now. So thank you very much for joining, and I really, really appreciate it, because you cannot imagine how hot this topic is, actually. There is a huge interest to understand what is MiCA, why it's needed, what we should do, who can do what, and what are the consequences just in case if you will not follow the rules. So I really appreciate your time and your expertise and your knowledge, everything what you said in this episode. It's like massive, massive support for
Thank you
my
very much.
audience.
Thank
Thank
you.
you very much.